Welcome to the Rule Classroom Plus. This is Steve Barton, and thank you for tuning in. This is where we take your questions, and we'll be asking Rick himself. So if you're watching on YouTube, Twitter, or any other outlet, we'll be pulling the questions from the Rule Classroom Plus. So head over there using the links down below or go to ruleclassroom.com. Rick, how are you, sir?
I'm doing very well, Steve. The better for being on with you. Thank you for your efforts to make the Rule Classroom a better place.
You're welcome. I love doing it. This is a lot of fun to me. Last time we talked was about a week ago. Do you have any opening thoughts? Anything you want to lead off with?
3 or 4. Markets are obviously distorted by events in the Middle East. I think investors need to understand that the distortions will continue as long as the dispute continues, but will probably end fairly quickly after the dispute ends, assuming that it ends quickly. In particular, fear of the disruption of the Straits of Hormuz, a narrow body of water between Iran and the United Emirates, has caused a real boost in the oil prices, about $15 a barrel as a consequence, an immediate consequence of this dispute. Before the dispute, the oil prices were soft. Depending on how long this dispute lasts, depending on whether or not there is an obstruction of the Straits of Hormuz, and depending on the extent to which this dispute softens the global economy, one needs to be aware that it's likely that the crude oil price declines, perhaps fairly precipitously after the end of the dispute. Similarly, the dispute is getting some credit for the increase in precious metals prices. It is true that precious metals buyers often respond bullishly to crisis, but it's important to note that usually sustained markets in precious metals are a consequence more of the debasement of currency, more as a consequence of the reduction in purchasing power in fiat instruments, as opposed to geopolitical tensions. So it may be that in the event that this conflict is short-lived, that we see some softness in precious metals as people who bought precious metals as a consequence of their nervousness over the dispute have lost their reason to own it. I continue to believe that we're in a primary bull market in precious metals, and that any hiatus in demand will be temporary as long as the U.S. isn't able, as an example, to balance its budget or find a political answer to entitlements, which I suspect will take a fairly long time. I note, too, that the financing window is open. The junior mining community in particular has complained about being underfinanced for decades. And the consequence of renewed equity interest in the natural resource business has meant that some issuers can raise money, and they are absolutely flooding in to raise money. You need to decide as a shareholder whether or not the capital raise that's taking place in your accounts is accretive to you or dilutive to you. In other words, is the equity dilution that you're suffering less than the amount of value that could be added to the company by the capital that they are raising? The lessons in terms of how to do that are right here at the Rural Classroom in the Introduction to Natural Resources. And we'll talk about this subject to the extent that you're interested in it at the Rural Natural Resources Investment Symposium. Note too, on the same note, that many of you have been attracted to precious metals mining companies as a consequence of the inflation of the money supply in US dollars. Note that the junior mining industry is a specialist in inflation described as the issuance of unbacked paper, in many cases share certificates from junior mining companies that are among the lame, the halt, and the blind. It is incumbent on you to protect yourself from this inflation by learning something about the value of junior companies rather than just the price. Again, the lessons are here at the Rural Classroom. Avail yourselves of them. Don't be a victim of government inflation or private sector inflation. Remember that the private sector always does things more efficiently than the public sector, including the issuance of phony baloney paper and inflation. That's it for now, Steve.
Okay, so current events, markets in the Middle East. You see that there's a bit of a choke point in the Straits of Hormuz, which has pretty much been around for probably 5 decades, is where there's kind of a choke point there for oil. And oil's had a nice bump here, up about $15 a barrel because of that, what you're calling the dispute. That little dispute is also giving rise to some recent action in the precious metals, which have driven them up a little bit. But you see that as kind of a short-term little tropical storm. The real tailwinds for gold and silver are going to be the continued debasement and printing of currency. You also see the financing window is open right now, but we have to be careful and follow the lessons in the Rural Classroom to make sure that we're not buying into companies that are just diluting away their asset.
Yeah, the comment I would have on that is that I hope the dispute is short-lived for a whole of reasons, separate and apart from my own portfolio. You don't want to see people die and suffer. And so I hope that the dispute is short-lived.
Okay. All righty. We all do as well. Yeah, I noticed that right away with the thing. I actually took a put on, or I bought some puts on oil, thinking that this was probably going to be short-lived, and luckily I got out with only losing a few percent before I took it off. Not sure how long that's going to go. Okay, so as far as comments go, we had a few come in before the episode, and let's see. Adam is wanting to know if a company's equity is trading above its 8% discount to net asset value, assume their equity cost of capital is lower as an equity issuance as value creative. Equity trading under its 8% discount to net asset value, share buyback would be value accretive. Is my thinking correct?
Your thinking is pretty correct. Equity valuations are part art, part science. To assume a real valuation, you need to do 3 things. And you've talked about it in the context of the cost of capital. To get a real valuation, you need to apply the same discount to the net asset value that you do to their cost of capital. But let's leave that aside. That may be double counting. You need to do 2 other things. The first is that you need to assign either a positive or negative correlation to their development pipeline, which is to say assets that aren't currently in the net present value, but could become in the net present value. And you also have to apply a premium or a deficit to the company's reputation with regards to recycle ratio. Recycle ratio is a financial term that talks about how many units of reserve can be added to a company's balance sheet on the margin that they enjoy from 1 unit of production. An oil company, as an example, that has an operating margin at 50% and sells a barrel of oil for $60. If that company can replace that barrel of oil with the $30 margin that they enjoy from the barrel that they sold, they have a positive recycle ratio. Companies that are able to recycle capital efficiently in their basic business and that have the same management team today as the management that gained the reputation are companies like Agnico Eagle that deserve to sell at a premium.
Okay. And Ingo is asking about Thungela Resources. Do you follow Thungela?
Don't know enough to comment. Know the company, but not well enough to comment.
Okay. All right. And Daniel wants to know your ranking on Highlander Silver and Rua Gold.
Neither are ranked.
Okay. David wants to know, can Rick give his current thoughts and rankings of Greatland and SolGold?
Greatland I have as a 4. SolGold I have as a 5. The SolGold ranking may go up as a consequence of improving Ecuadorian politics.
Okay. And Han wants to know, hi, Rick. Could you please comment on Centaurus Metals and Lifezone Metals? Which one do you prefer?
I probably prefer Centaurus with the caveat that Centaurus will almost certainly have to finance in fairly short order. I hope that they finance in conjunction with our conference, July 7 through 11. Centaurus is even less loved than Lifezone, but I have to say I like them both. The Lifezone project, Kabanga, is one that I've been around for 35 years. I mean, a very, very long time. I don't know the deposit well. I've been on it. It's a very high quality nickel sulfide deposit in Central Africa. Well known, almost certain to get larger. Not unlike, in some senses, the Centaurus deposit, both in out of favor commodities, both large, both high quality deposits.
Okay, what going on Centaurus? How much do you think it's going to cost for them to build this?
I'd rather wait until a definitive feasibility study comes out as opposed to speculate. I suspect that they're going to tap the market for $25 to $30 million to keep the drills turning, which they need to do. This deposit is already world-class, but it needs to be drilled on tighter spacing. They need to have a better handle on different styles of mineralization and different concentrations in different parts of the concession. And they need to take the opportunity to better explore the size and the depth of the deposit. There's a lot of work that they can do that adds a lot of value while they're doing the feasibility study work.
Okay. All right. Well, hopefully Darren could get the financing in a month or so. All right. And Daniel, how would Rick rank Marin Energy and Unico Silver?
I don't know the first company that you're responding to. Unico, I don't have a ranking on.
Okay. It's spelled MEREN. I've never heard of it.
Yeah, I have heard of it, but I don't know it well enough to comment.
Okay. And David wants to know, I haven't heard Rick talk about Hercules or Raina Silver in a while. Can we get your current outlook and rating?
Raina has a 6. That looks to me like an exploration project or series of projects so far that haven't worked. I may downgrade it to a 7 if I don't have any encouragement to have it. I like the people behind it a lot. I like their exploration ideas, but nobody drills their worst holes first. And we haven't got a lot of data that would cause us to be excited about what they're doing. Hercules is different. Hercules, they've had both good results and bad results, but it's pretty clear that there's a decent sized mineralized system, that there is both proximal epithermal mineralization and basic porphyry mineralization. And there are some size implications which are interesting. It's still very early on. It is in Idaho, which, despite rumors to the contrary, is not yet truly a mining-friendly state. It's in an area where they still seem to spell shop SHOPPE, which always scares me in the mining business, but really intriguing technical data. Note that I am a shareholder of Hercules.
Okay. Let's see. Don't know Mirren. He says updated thoughts on Mirren Energy, earlier called Africa Oil. So maybe they changed their name.
Marin. Okay, now I'm with you. Marin Energy.
Oh, Mirren. Okay.
Africa Oil has been a long-term holding of ours. The new company, sorry about a senior moment with regards to that name. That's the result of Africa Oil acquiring the private equity interests in Africa Oil's producing interests in Nigeria. The new acquisition and the 4 years that both parties have spent paying down their debt means that the assets are generating really extraordinary free cash flow. They will do three things with that cash flow. One, they have suggested that they will increase returns of capital to shareholders, either via regular dividends, extraordinary dividends, or buying in and retiring equity, which the Lundins are prone to do when they're generating a lot of free cash. They will also begin to exploit the exploration potential on their Nigerian holdings that have thus far not been exploited while they improve the balance sheet. And then probably one can count on them increasing their participation in offshore Namibia, where they've participated in a couple of very intriguing discoveries. I believe that the company is selling at approximately half its net asset value at a $60 oil quote. Well, I'm not sure the $75 quote will continue. It does some very interesting things to the company's free cash flow in the interim, all positive.
Okay. He's also saying that the Lundins look like they've reduced their investment a little bit. Does that affect your decision at all?
The Lundins have reduced their proportionate investment because they aren't the largest shareholders anymore. And I don't think that this is any longer a Lundin-focused company. The Lundins, being the second largest shareholders, have committed to the largest shareholders that there will be substantial returns of capital in this company. I think that you might see the Lundins return to this company in spades, depending on the success that their exploration efforts in Nigeria enjoy. These are extensive portfolio holdings, and they are portfolio holdings that were stripped for cash by Petrobras, the seller, and where the cash has been utilized mostly to repay debt by the people who acquired it. Now that that's taken care of, they can refocus some of that cash flow on exploration. The Lundins are extremely exploration oriented, and if you give them an excuse to increase their holdings, they will do so. In the absence of that, they will probably reduce pro rata with other shareholders as the company reduces its capitalization. They don't want to see themselves be 29.9 plus shareholders of Marin. They don't want to be seen from a regulatory viewpoint as being control shareholders in the company.
Okay. All right. And Victor wants to know, what are your thoughts on Dorchester Minerals?
No longer have Dorchester. That's a name from my past. The conventional natural gas producers, particularly up in the Hugoton embayment in southwest Kansas, where Dorchester is, have suffered a competitive disadvantage to their peers, particularly their peers in South Texas and West Texas, that produce gas as a byproduct of non-conventional or tight oil. And I think that competitive disadvantage continues. Although I haven't studied Dorchester for a long time, I suspect that Dorchester is very cheap by most financial metrics. And it's to note that where they primarily operate is extraordinarily well serviced with gas gathering, gas processing, and gas transmission infrastructure.
Okay. Daniel wants to know what you think about Freegold.
I don't own Freegold. I'm attracted by a large, low-grade opportunity. I'm nervous about the upfront capital expense relative to the key free cash flow that might be distributed from the project, and I'm not so much any longer an optionality buyer. I was a big optionality buyer in the early 90s when optionality was cheap, but optionality is no longer cheap. Big, big, big deposit, though. Like Tudor, if they can find areas where that large diffuse mineralization managed to concentrate, if you can find areas that had good historic rock preparation, and as a consequence of that allowed higher concentrations of gold to precipitate out, that would be a game changer. Thus far, they haven't been able to do it.
Okay. And he also wants to know STLR Gold. You heard that? STLR Gold? No?
No,
Okay. Daniel, if you could put the full company name, Rick and I are notoriously bad at ticker symbols. Okay.
good at ticker.
Han, what's that?
And traders are usually good at ticker symbols, and investors usually need names.
Okay. Han wants to know, hi, Rick, could you please comment on Meteoric's plan to mine 5 million tons a year? They have 1.5 billion tons. Isn't it way too much resources if they only plan 5 million tons a year?
Name of the issuer?
Meteoric.
Oh, what? The resource they have is one that is really correlated to capital expenditures. And I think that what you'll see is two things. They're operating in a fairly small market in the rare earths business, and there's only so much material that the market is prepared to accept. The second thing is that the upfront capital cost means that probably they have a higher net present value starting at 5 million tons and then upgrading from 5 million tons, utilizing some of the cash flow from production as opposed to incurring the front end capital cost and amortizing that early on. So no, I think I think unless they in the context of drilling down the deposit found extraordinarily high grades, which would allow quick recoupment of capital relative to the upfront capital expended.
Okay. Can you also comment on Viridis Mining? I guess they're a neighbor to Meteoric. I haven't heard of them.
Yeah, they have, I think it's the western extension or the northwest extension of the same caldera. I don't own it, but I hear interesting things about it from people who do own it, including a couple people who know a fair bit about rare earths.
Okay. Possible one to keep our eye on. And Josh wants to know, what do you think about Heart Gold?
Small mine. I don't think about it. Don't own it.
Okay, that was quick. How about Copper Corporation? Oh, that's the same one. Gold Heart Copper Corp, is it?
Yep. Don't care.
All right. There you go, Josh. He also wants to know, what are your favorite oil and gas stocks right now?
For most people, Exxon. In a business as big as the oil and gas business and as good as the oil and gas business, if you can find a market leader, that's where you start your portfolio. Exxon has a wonderful 30-year track record for capital deployment. They have a great upstream business, a great downstream business. They have a discovery in Guyana that's big enough to move the dial on a company the size of Exxon. In a business where worldwide the industry is underinvesting between $1.5 billion and $2 billion a day in sustaining capital investments, Exxon is keeping their sustaining capital investments current at the same time as they bought $60 billion. They spent $60 billion to buy Pioneer, assets that interfinger well with their assets in the Permian Basin. So you start an oil portfolio, I would suggest, with the biggest and the best of all of them, which is to say Exxon. Other names, Chevron is an integrated company, a good company, not as good as Exxon, but still a good company. Occidental has a lot of leverage to U.S. oil and gas operations, a higher proportion of high quality proved undeveloped locations than most companies its size. If you have the courage to stomach political risk, you look north of the border. The Western Canadian Sedimentary Basin is way under drilled compared to U.S. basins. So a lot more undeveloped geological potential. There's great human resources north of the border in Canada, pretty good physical infrastructure. The problem is at the top. The government, paradoxically, has been opposed to the best industry Canada has. The new prime minister suggests that they're going to be an energy powerhouse at the same time that he suggests that climate will be a centerpiece of all his financial negotiations. I guess he's schizophrenic. If you can stomach the Canadian political risk, a basket of high-quality Canadian oil producers probably sells at half the multiples that their equivalents in the U.S. sell for.
Okay. All right. So number one, Exxon, down the list a bit, Chevron, Occidental, and then start looking north of the border. If we're in the beginning stages of an oil and gas boom here, like with gold, I'm imagining, the way you said is like the Circus Master's whip, and Agnico Eagle, Newmont, Barrick, those you start with, and then kind of the mid tiers, and then down to the juniors. If Exxon and Chevron and Occidental are the handle of the whip, where does the middle part of the whip go? Is that like Schlumberger or
Devon, Equitable, the service businesses are a different business, and they're very good businesses, by the way. They're different businesses. The middle part of the whip likely includes the Canadians that we've talked about so often in the show: the Arcs, the Freeholds, the Prairie Skies, the Tourmalines, the Peytos, the Birchcliffs. Plenty of room throughout the whole thing. I will tell you, I believe that gold is in a bull market now. I don't believe that oil's in a bull market. So you can do the best of the best. I suspect that if the turmoil in the Middle East subsides, that continuing economic weakness means that oil prices stay weak and that the oil companies stay weak too. I personally own them, and I personally will keep buying them, but they're not this is not necessarily a sector for people who are looking at immediate gratification. Steve, you'll remember that in 2023, as an example, gold investors were concerned about the fact that gold moved and the gold stocks didn't move. People whose impatience kept them out of the gold stocks missed a 60 or 70% up move in 2024 and thus far through 2025. My own belief is that sometimes assets are cheap enough and you buy them. And I would buy the oils now, but I would temper my enthusiasm for the timing of a bull market.
Okay. All right. Okay. David wants to know your latest thoughts and ranking of Gold.
I have a 4 on Go Gold. Your risk in Go Gold is political. The current federal administration in Mexico is ambivalent about mining, to say the least, but they understand the politics of Mexico, and they suggest that their decisions will be governed by acceptance or lack of acceptance for projects at the local level. Go Gold has done a good job in terms of community support, and they've done a great job in exploration. So I have them as a 4. I don't believe they're a mine. I believe they're a camp. I believe they're several mines. And despite that, the fact that I was very nervous about them putting a tailings reprocessing operation into production, which I thought was a distraction, they've generated about $4 or $5 million a year surplus cash flow from that operation, despite my skepticism. And they have more than covered their G&A from that operation, which says a lot.
Okay. They have a lot of silver despite the name, right?
Correct. It's a polymetallic deposit. I suspect that the majority of the economic benefit will come from gold, but as you suggest, they will be an important silver producer too.
Okay. And Daniel got back to us. The ticker rattled off. It's Stellar Gold.
Stellar Gold, I know, I don't follow. There was nothing that was attractive enough about it when I looked at it to cause me to deepen my investigations.
Okay. David wants to know, you've mentioned Royal Road Minerals a while ago. What are your current thoughts and ranking?
I'm a Royal Road shareholder. I'm attracted to that management team who I've known for a very long time. They have a habit of going into frontier markets right after the flak jackets are off, but before the currency is convertible. I wanted to make a great discovery, grassroots discovery in Armenia. I've been attracted to them ever since. They did a reasonable job in Nicaragua, which they turned into cash. They sold it. They are still active in Colombia, but they're in a very, very, very hard part of Colombia. Putumayo in the far south, real narcotraficante country. But their focus now is on Saudi Arabia, on the Arabian Shield. And I like the work that they're doing there. This is early stage grassroots exploration, so it has all of the risks attendant with that and all the potential rewards. They have varied a little bit from the prospect generator business model in the sense that what they normally did was develop an economic theory, lease the ground, develop a process for testing the thesis, and farm it out. You will have heard about this in our prospect generator bootcamp. What's happened is that the fiscal terms in Saudi Arabia are such that it comes with a built-in joint venture partner, the Saudi Arabian government. So their landlord and their investor is one and the same. It'll be interesting to see how this works. They took me on a telephonic tour of their geology about 6 months ago, and it was absolutely fascinating. Tim Coughlin, who runs the company, ex-Rio Tinto geologist. I mean, a real geological superstar.
Okay. Zahara wants, is OceanaGold in New Zealand? Is that
Oceanic Gold?
Oceanic?
Yeah, the most important production they have is in New Zealand, but they also operate in North Carolina and in the Philippines.
Okay. Says in your interview with OceanaGold CEO, he said that they could increase the mine life of their Macaris New Zealand deposit in the current high gold price environment. What does that mean?
The Macraes deposit is a slate-hosted deposit, like their Hale deposit in North Carolina. And these deposits tend to be, because of the nature of their orogenesis, pretty broadly distributed. And your controls there are largely economic. There were constraints in terms of developing the lateral extent to the Macraes deposit that had to do with gold price and the return on capital for drilling those off and expanding the mine works to extract that material. At $1,500, those deposits probably didn't work. At $3,000, those deposits probably work very well. Macraes has produced for most of my life, and I suspect at these gold prices, it will continue to produce for most of the rest of my life.
Okay. So basically there's like fingers going out and they weren't economic before, but now.
Yeah, more than fingers. There were fairly high-grade concentrations of gold where they started, and the gold, at least so far, has diminished. The concentrations have diminished, and the capital cost to expand the mine workings laterally were high relative to the gold price, so recoupment of capital was an issue. Note, however, that the processing plant, the mill, all that kind of stuff's paid for. And so you're spending capital to leverage capital that you've already spent on. I suspect if this gold price holds, and I suspect it will, that Macrae has a lot of life left.
Okay. Josh wants to know what you think about Juno Corporation.
Don't know enough to comment.
Okay. And David Riley says, any thoughts on EMX royalty?
I love EMX royalty. I'm a large shareholder. Stock has done fairly well lately. The stock has been an aggressive buyer of their own stock. This is the classic prospect generator. They have generated and turned, since I've been a shareholder, which goes back 20 years, well over 200 projects, in addition to supplementing the royalty portfolio with ones they've discovered. They've bought a couple. What's of particular interest to me are the royalties that they have in the Bor region of Serbia, where Zijin, the major Chinese multinational mining company, is enjoying real success on the upper deposits, is putting the lower porphyry into production. That's partially controlled by the EMX royalty, but importantly, appears to be on a new discovery where at last count they had 12 rigs running. The Bor royalty, I suspect, is worth as much as EMX is selling for, and you get the whole rest of the company for free, which is a pretty good price.
Wow. Yeah. Okay. That's my favorite price. Free. Josh wants to know what you think about Axo Copper.
Don't know enough to comment.
Okay. And David says, I haven't heard much news on Adriatic for a while. Didn't they get taken over?
Adriatic is subject to an agreed on takeover bid from Dundee Precious Metals.
Okay. Okay. Dundee's buying them. Do you still own it?
Both. I own Dundee and I own Adriatic, and I will keep both. My suspicion is, like many takeovers, when the Adriatic shareholders get their Dundee stock, many of them will sell it. Many of them held Adriatic as a silver stock or as a takeover candidate. They will be in a gold-centric company, so no longer a silver company. And those people who held it in anticipation of a takeover will have already enjoyed their takeover. My suspicion is that after the transaction takes place, that Dundee will sell off, and if that occurs, will be a buyer.
Okay, that's where you'll be a buyer. And Jay wants to know, hello, views on Hochschild Mining, valuations given precipitous decline as of late.
If you are willing to take Peruvian political risk, Hochschilds is a veteran mining producer. They have not always been great explorers, although they know Peru reasonably well. They expose you to both national and regional political risk in Peru. It's difficult to construct a real silver portfolio without including Hochschilds, however.
Okay. David wants to know, as far as uranium, what is Rick's latest thoughts and ranking of Denison Mines?
I have upgraded Denison from a 6 to a 5. I've done that because I wouldn't describe myself as comfortable, but I'm less uncomfortable with their proposal to try in situ uranium mining at depth. It's never been done before. We don't know if it's going to work, but they've done an awful lot of preliminary testing. So I'm neutral on that idea rather than hostile. Meanwhile, they have the best database in the Athabasca Basin outside Cameco, having operated there for 40 years. Importantly, they have a permitted and operating mill and tailings. They don't have to get a permit for that. So that to the extent that they enjoy successful exploration on their own land with their own database or in conjunction with juniors, they will have the unusual ability of not having to build processing facilities, but rather feed that material through an existing permitted and, in fact, operating mill.
Okay. Yeah, because this is something that's never been done before, right? I mean, yeah.
That's correct. To be honest, it still scares me. It just doesn't scare me as bad as it used to.
Okay. And Peter, yes, thank you for the spelling there. Okay, from Warsaw, Peter from Warsaw, he's curious about Mundoro. Well, let's just start with that. Okay, so Mundoro Capital, Teo.
Yeah, Teo's great. I'm a decent sized Mundoro shareholder. Your risk there is illiquidity. This is a tiny company, really, truly tiny company. And you almost have to make an appointment to make a trade. If you go to buy it, you got to be patient. And if you needed to sell it, you got to be patient too. She's a superb human being. She's a great geologist. She's a great motivator of geologists. She's exploring for very large copper gold porphyries, both in the Carpathian metallogenic belt, Tethyan metallogenic belt, and also in the Laramide in Arizona. Her partners are big multinational mining companies. She's so parsimonious that she actually is cash flow positive without producing. She's cash flow positive on exploration fees. I'm a huge fan of hers, and I'm way long.
Okay, yeah, she's basically getting BHP and guys like that to pay for this drilling, and then she kind of recaptures that in the form of a royalty or adds it to the balance sheet, right?
Well, she gets a management fee for conducting the exploration programs because she can often do them more cheaply than BHP. So she gets her exploration risk covered, but she also receives a management fee, which, in addition to covering the work program, also covers her general and administrative expenses of public company. It's extraordinary performance.
Yeah. Okay. All right. He's also asking about Emperor Metals.
I own Emperor. I get nervous about it. I consider it a consolidation play in the Abitibi. It's a deposit that on a standalone basis may or may not be economic, but the Abitibi has a real surplus of mills. And what attracts me to Emperor is that it may be a good tuck-in acquisition for somebody that has an existing mill that's ore hungry. There's also a lot of exploration upside around it. So, there are risks around it. Is it economic on a standalone basis? I don't know, to be honest with you. Could it become economic on a standalone basis? I think so. Does it need to? I'm not so sure. I think if you already have a mill in place within trucking distance, that Emperor is the kind of deposit, once it's drilled off, that you can put in production without having to build a mill. Just trucking the material and saving yourself the $200 million up front in processing facilities.
Okay. I remember looking at them maybe a year or so ago, and it didn't look like the deposit hit anywhere close to your tier one. Have they added a whole bunch? I haven't looked at it in a long time.
Nope.
Okay.
This is, I wouldn't want to say how many ounces it is, but it's no part of 5 million.
Yeah.
What attracts me to it is the likelihood in a bull market. I mean, first of all, I think their ability to access capital to explore in Canada with Canadian flow-through funds in a bull market means that the share price goes up, the cost of capital falls. And I think the ultimate outcome is that they get tucked in by somebody.
Yeah. Okay. Okay. All right. And he's curious on Knorrland Minerals.
I'm way long Knorrland. They have an economic discovery that they have a 4% royalty on, being operated and owned by Sumitomo. I think that royalty is worth what the whole company is selling for. Meanwhile, you have a conceptual exploration team that is good as exists in Canada. They generate very large scale exploration concepts. They stake the ground, they develop the thesis, they sell them to third parties who take on the exploration risk. Zach Flood, the CEO of the company, is somebody who I've known so long that I did a lot of business with his father. I mean, so I go back 40 years with the Flood family. And this guy's first class, as is the rest of his team.
Okay. And what rankings do you have for Mundoro, Emperor, and Knorrland?
I have Emperor as a 5. I have Mundoro and Knorrland as a 4.
Okay.
By the way, those are good for me. I'm tough, and I need to brag a little bit. All 3 will be exhibitors at the Natural Resources Investment Symposium.
Okay. We can talk to them ourselves out there. And we talked about Go Gold earlier, Peter, so watch the replay. He's also asking, and I've had a lot of people ask me about this the next time we get on, about Battle Bank. Do you have any plans to go public so that small-time investors can buy in?
My hope is that we never go public. That'll be determined by the shareholders. We took our last bank, Everbank, public. That allowed us to grow very fast. But it also meant that towards the end, we were managing the bank for Wall Street as opposed to for a better bank. My hope is that Battle Bank is owned by the community. It's owned by the depositors. It's owned by the borrowers. It's owned by the employees. And that we can focus on building the best and most profitable bank that we can. Again, that'll ultimately be up to the shareholders. And I'm just one of the shareholders. But I don't like the idea that my management team will be working for some hedge fund or ultimately for Wall Street banking analysts who know less about our customers than we do.
Okay, there you go. Mike wants your thoughts on Orosur. I may not be pronouncing that right.
I'm going to have to pass on that one because I don't know what, what you're referring to.
Orosur.
Orosur. Yeah, I don't know it well enough to have a comment. I'll leave it there.
Okay. All right. And Alan wants to know comments and current ranking for Aclara.
Aclara, I have as a 4. Somebody will need to be patient for that ranking to work. This is a high quality rare earths deposit put together by very experienced, very high quality South American miners. It's in Brazil. It's in a part of Brazil that has an awful lot of infrastructure. I'm attracted to the rare earth space generally. I'm attracted to the rare earth space because, well, first of all, rare earths aren't rare. There hasn't been a lot of exploration for them because the Chinese produce them so cheaply. What a lot of people don't recognize is that the Chinese produce them cheaply as a consequence of really disgusting environmental degradation, which neither the Chinese people nor the Chinese government are any longer willing to tolerate. The consequence of that is that the costs associated with producing rare earths in China are increasing rapidly. Meanwhile, the Chinese have decided to weaponize rare earth supplies. And so the race is on to find high quality rare earth deposits outside of China. There are 4 in the world that I know of. That doesn't mean there aren't more. But there are 4 that I know of that are in control of people who I have a sense of humor for. Aclara being one.
Okay. Aclara, Meteoric, Acora. And what's the other one?
There are 2 others that are in larger corporate wrappers that haven't been broken out yet.
Okay. All right. Josh wants to know if you own any Midnight Sun Mining.
I do not.
Okay. And Alex is, oh, yes, this is an interesting one. Okay. Alex is asking about Molly Court places Canada's Barrick Gold Mine under provisional administration. Have you seen that story?
Sorry?
Barrick, their Mali asset.
I'm sorry. I thought when you said Mali, you meant Mali Corp, which is to say a molybdenum producer.
Okay.
The Malian government, from my point of view, continues to negotiate with Barrick in bad faith. And they have taken Barrick's Lualu mining complex and put it under provisional administration, which is a fancy way of saying they've stolen it. I'm not sure that Barrick is wholly blameless in this. I note that, as an example, B2 Gold and Allied Gold went to Mali and negotiated with the government quietly and solved their problems. Barrick's negotiating style has been somewhat more bellicose. Bristow, by the way, the CEO of Barrick, has been a friend of mine for a long time. I have a high regard for him, so I'm not sure that what he did or didn't do is appropriate or inappropriate. What I do know is that they have ongoing problems in Mali. What the Malian government does is what governments do when they have an opportunity to steal. They take it. And we'll see how this plays out.
How big of Barrick's balance sheet is that asset?
It isn't any longer. Well, I wouldn't say it's immaterial. It's probably 10% of NAV.
Okay. All right. So that's not nothing. All right. Okay.
And, the real expertise that Bristow has is emerging in frontier markets in Africa, including Mali, where he was a pioneer. A lot of the supposition that investors like myself had about the potential growth of Barrick over time involved their ability to absorb 4 and 5 million ounce producers in West Africa and navigate the social and political challenges of West Africa, which they've done well for 40 years, and grow the company because we consider that to be a durable competitive advantage. The problems that they encounter in Mali make us wonder whether those advantages are as valuable as we had believed them to be.
Okay. And Molly Court. Okay. Peter wants to know about Ecora Resources.
Ecora is a royalty company, high quality royalty company. I believe selling at a discount to what it's worth. Growth is built in to the company, meaning that they have a lot of non-producing royalties, which should come into production in the next 5 years, as well as a portfolio that will come in longer. A pretty disciplined royalty acquisition strategy. And I think it's important to note that with the recent investment by Tether into a junior royalty company, that the royalty and streaming space, in terms of their access to capital, is really changing. The financial implications for commodities investors of having a resource stream that's unencumbered by operating expense or capital expense is becoming better and better understood. I think the recent transaction where Tether took themselves to 39 or 40% of Elemental Altus will begin to change the valuation metrics around the royalty business and also their methods of finance.
Okay. And he's also asking about Uranium Royalty Corporation. Uranium's had a nice little bump lately. What rankings and thoughts?
I have now downgraded Uranium Royalty to a 5 from a 4, simply because the stock has performed so well. A lot of my rankings have to do with valuation as opposed to momentum. 6 months ago, that stock was cheap because people hated it.
Yeah.
When you double something, it's precisely half as cheap. So I've had to downgrade it, not because they've done anything wrong, but because they've done so many things right. They don't fire my greed the way they used to. It's part of Amir Adnani's complex of companies. Amir Adnani is a spectacular young entrepreneur, a great promoter, a great hirer of talent, a great mobilizer of talent, a unique human being who has built, between Uranium Resources and Uranium Royalty, very formidable entrants, particularly in the U.S. uranium business, but also with an important foothold in the Athabasca Basin.
Okay, I see a couple questions on Oceana. We hit that earlier. Catch it in the replay. And Daniel wants to know, G2 Goldfields or Snowline? Which one is a better value at the moment?
The sooner takeover is probably G2. We have no idea how big it is. You have to be willing to stomach Guyana social and political risk, which I think is low, but the market thinks is high. What's useful about G2 is it is the, I think, on-strike extension of the deposit which is being put into production right now by G Mining. Some form of consolidation would seem to be inevitable, although there's a fair bit of personal antipathy between the managements of the two companies. It would be, I think, stupid to build a separate processing plant north of the line when you could access the processing plant south of the line and also access the incredible construction talents resident in G Mining. Snowline is a different proposition. It is what I think will ultimately become a 10 million ounce deposit. Those are really rare at great grade in Canada, which has a reputation for being not so politically risky. It is in a remote part of Canada. It's in a part of Canada that is a long helicopter ride from nowhere. So the infrastructure and construction challenges will be high. It's in a part of Canada that doesn't have a lot of experience negotiating impact benefit agreements with existent Native people. And so you're going to have to invest in even the negotiating capacity of the host First Nations. So there's going to be some real challenges. I can't help but own it. I see it going to 10 million ounces and perhaps further. 10 million ounces at that grade in a jurisdiction that, while I may not love them, I know them, is extremely attractive. I think this deposit has to be owned by a major. I would suspect, just by supposition or something, that given Newmont's focus across the border in the Golden Triangle of BC, and given the fact that Newmont has to produce 6 million ounces a year of production in order not to decline in terms of resource, that ultimately Newmont Snowline might make sense. That's not going to happen for a few years. Newmont's going to let Snowline do the ugly work with regards to politics, local politics, community relations, exploration, access, permitting, all that kind of boring, tough work. They're going to let the existing management de-risk it. When that deposit has been de-risked and when you have a sense of what it is, I think there's going to be a wide open bidding war.
Okay, cool. They're going to let them build the road first and drill it out and all that before that's even on the table.
They want to get a sense of, I think everybody who wants to buy it knows they're going to overpay. And so they want as much risk and as much time taken out of the equation as they can, given that they're going to have to pay too much. They'd like to know what they have to pay too much for.
Yeah. Okay. And Antia wants to know, hi, Rick, what are your thoughts on the difficulties regarding metallurgy of the Boomedine mine? This is stated as a risk in their annual report in 2024. What are your thoughts?
There are some risks. I think the problem might be that there's more than one ore type there, some refractory, some not. These are problems that other people have faced and dealt with. But I think there are metallurgical challenges. I think the fact that they reported it in the annual report meant that the challenges are significant enough that their auditors or their technical advisors suggested that they report it, which I think is responsible.
Okay. And Josh, you just had an interview with them recently. Josh is asking about Nations Royalty.
Yeah, I'm intrigued with Nations Royalty. I own some, despite the fact that I think the market capitalization is in excess of the net present value, because so much of the net present value is tied up in deposits that I don't know when they will commence production. KSM in particular, Rudy Frank's deposit. What I like about Nations Royalty is the concept. It is an Indigenous-owned royalty company in Canada who has decided that its mission in life will be to assist Aboriginal and Indigenous bands in Canada in monetizing their mineral rights. Importantly, the company is over 70% tribally owned in Canada. And although it's run it's run by a Scot, part of a distinct minority group in Northern Canada, a friend of mine. It will be native run. There are a couple of young First Nations guys that are really involved in the company right now. The young man who runs corporate development for them, who used to be a mining analyst at Canaccord, who I know reasonably well, and Cody Penner, who I know quite well, a young tall tan. This is a concept company. This is either going to work in spades or it's going to be challenged. It's worthy to note that it's part of Frank Juster's stable of companies. Frank has a habit of making sure that his companies are well financed. And Frank is nothing if not tenacious. Those of you who haven't heard my interview with Frank Justra in the Rural Classroom are well advised to go back and listen to it. And you should listen to the interview around Nations Royalty, which I think does a good job of unpacking what it is they're trying to occur and the discussions that they're having with over 50 First Nations bands in Canada as we speak.
Okay, excited to see that. They're going to be at the symposium, and we are tapping on the hour here. Rick, we got the symposium coming up. I am super excited. It's about 3 weeks away. Tell us what we can expect out in Boca Raton.
Well, at the risk of sounding really arrogant, this is the finest natural resource investment event in the world. It's so fine that I can say to you, if you attend and you don't think you got your money's worth, I'll give you your money back. There are very few financially riskless transactions in the world. And when you're presented with a transaction where you only have upside, no downside, you're sort of foolish to say no. And I think that this conference is a circumstance where you're sort of foolish to say no. If you're interested enough in natural resource investing that you're part of the Rural Classroom and you attend these events, the idea that you wouldn't come to the finest investment event of the year in that sector at no financial risk to you makes no sense to me. Every exhibitor that you see there has been vetted. They're all owned in accounts, owned and managed by the conference organizers. Doesn't guarantee that all those stocks go up, but it does guarantee that they've been vetted. Unlike other investment conferences, we've interviewed every exhibitor and every speaker before the conference. Those tapes are available at the Rural Classroom or at the Rural Investment Media YouTube channel. So you can arrive at the conference already prepared, because we're going to give you 50 hours, between 50 and 55 hours of programming. You'll need to arrive prepared. In addition to that, we hope to maintain discussion groups about the conference at the Rural Classroom for a year. And you will have access to the tapes of the conference, whether you attend via live stream or live. You'll have the ability to review the tapes of the conference for a year after the conference. All of those things together, great big picture thinkers, great exhibitors, great speakers, the living legends. For those of you who don't know, we invite entrepreneurs who've built multi-billion-dollar companies from scratch to tell us how they did it and tell us how to identify $20 or $30 million market caps that could become $2 or $3 billion market caps. All of that takes place July 7 through 11. My preference would be that you attend it in person. My preference is that you take advantage of all of the non-verbal communication that takes care of the conference. But if you aren't able to, we've invested hundreds of thousands of dollars in the live stream. We have a live stream ombudsman, Paul Harris, from the Mining Journal, who will be your guide to the conference. Whether you attend live or live stream, remember that you have access to the recordings for a full year. Remember, too, that if for any reason you aren't happy with the value we've added, we'll give you your money back. Nobody else does that.
Yes, I look forward to it. Last year's conference was awesome. I'm expecting the same this year, and I've done the live stream as well, which is also a lot of fun. All of the links will be down below, so be sure to check it out. Rick, always a pleasure. Thank you very much.
We should note, by the way, that our resident genius, Albert Liu, combines live and live stream. He comes to the conference live, and when too many people are bugging him, he goes up to his room and attends the conference via live stream from the conference.
Because none of this would be possible without him. So thank you, Albert. And thank you, everyone, for being here. If you want to catch us next time, the questions that come in, we're pulling them from the Rural Classroom Plus members, but everyone can watch the channel. So if you want to ask a question, you can try it out for free for 2 months in the Rural Classroom Plus. Be sure to check that out. And yeah, thank you again, Rick. This is always a pleasure, and I will catch you next time.
My pleasure, sir. Thank you.